The framework for the preparation and presentation of financial statements adopts the accrual concept. This concept is also referred to as matching concept because it is based on the view that income and expenses that occur in the same period should be matched up to determine whether the entity made a profit or a loss during the period under consideration. In this video, we'll delve into this concept where you'll learn how it is applied in real business transactions. Hello and welcome to the Accounting Feed. My name is Philan and I'm your host for this session. First off, what is accrual concept? Accrual concept explains that business transactions are supposed to be recorded when they occur and not when the payments are made for them. As such, income should be recognized in the statement of profit or loss in the period in which they were earned, not necessarily when the cash was received. Expenses, on the other hand, are recognized in the statement of profit or loss when they are incurred and not when they are paid for. Treatment of accrued expenses. Accrued expenses are those expenses which relate to an accounting period under consideration but remain unpaid. Since they relate to the accounting period in question, they should be expensed or charged against the income for the same period, even though they are outstanding. The same amount is considered as a current liability since there is an outstanding obligation to be settled. The double entry for this, therefore, is to debit expense, an item of statement of profit or loss, and credit accruals, which is an item of statement of financial position, as a liability. Treatment of prepaid expenses. Prepaid expenses are expenses which have already been paid in the current year but relate to future accounting periods. As such, they should not be charged against income for the year in which they were paid. Prepaid expenses, therefore, should be recognized as current assets in the statement of financial position as well. The double entry is debit prepayment, an asset in the statement of financial position, and credit expense, which is an item of statement of profit or loss. Treatment of accrued income. Accrued income is income which has already been earned during the period but has not yet been received. This relates to the year under consideration, and therefore it will be recognized as income in the statement of profit or loss. The same amount also appears in the statement of financial position as a receivable. The accounting treatment of accrued income is debit accrued income, an asset in the statement of financial position, and credit income, which is an item of statement of profit or loss. Treatment of prepaid income. Prepaid income, also referred to as deferred income, is an income that has already been received but is yet to be earned. This occurs when a customer pays for goods or services in advance. Such a transaction creates an obligation on the part of the entity to deliver the goods or services. Since it relates to the following accounting period, it will be deducted against income for the year in the statement of profit or loss. The same amount will appear in the statement of financial position as a liability. The accounting treatment of this, therefore, is to debit income, the statement of profit or loss, and credit deferred income, a liability in the statement of financial position. To make it easy to remember, use this table. As you can see, accrued income is an asset. Accrued expense is a liability. Deferred income is a liability, and deferred or prepaid expenses will be categorized as assets. Impact of accruals and prepayments. Accrued expense increases expenses, reduces profits, and of course increases liabilities. As for prepaid expenses, this reduces expenses, that means increase profits and increase assets. Prepaid income reduces income, reduces profit, and of course increases liabilities. Accrued income will increase income and increase profit and increase assets as well. So this has been summarized in this table, and this will help you to really figure out how this impacts your financial statements, that is the statement of profit or loss and the statement of financial position. This marks the end of our session today. If you like what we do, please do not forget to subscribe to our channel, The Accounting Feed, so that you do not miss any future uploads. In case you have any question, do not hesitate to ask it down below in the comment section, and I'll take my time and answer all of them. If you know anyone who is interested in accounting topics, please do not forget to share with them. Share the channel, share the video. Don't be stingy. Until the next one, see you again. Cheers.